Hello guys, a huge pleasure to be here. I don't have that much time, so I will have to go a little bit quicker than usual. But essentially, I'm going to talk about the 50 different trends or forces that are happening in the world right now that I think will prove to be some sort of powerful tailwinds or powerful backgrounds for Bitcoin's growth, Bitcoin's adoption, and its price appreciation as well. So I think, first of all, if you look at a lot of surveys that's been done recently, you'll notice that global trust in governments, large banks, large tech companies, and large mass media companies is at multi-decade lows. Some of them at all-time lows. And in general, I think that these 3 or 4 anchors that I've mentioned are the anchors of our current monetary system. So if the trust in these institutions is slowly dwindling, I believe people will slowly but gradually start looking for various alternatives. But it's not just between the citizenry and the governments. Several studies show that the interpersonal trust, or people trusting each other, is also at very low. So the index is very, very low right now. And people's faith in one another is really, really at multi-decade lows. So millennials, which is my generation, is apparently the least, the one that trusts each other the least. But trust is also slowly eroding between countries also. You see this in many ways today with things such as Brexit. You see this with all the trade wars that are going on right now. Kind of all the kind of political blaming that's going on between countries. I will quote my good friend Manuel Polavieja, who said that one of the most disrupting things about Bitcoin over fiat is that Bitcoin, among other things, does not need to rely on a complex legal infrastructure, among other things, in order to have value. Furthermore, I'll go back. Right. So I'll just keep on going. Furthermore, as many of you may know, global debt just hit all-time highs as well this year. So we kind of, and it's more than 50% up since the global financial crisis. We have to honestly ask ourselves whether all of these $250 trillion are going to get paid back. They may get paid back in nominal terms, but I have serious doubts that all of these 250 trillion will get paid back in full purchasing power terms. But that's not all. I think if in many countries, particularly in the developed world, if you add unfunded liabilities and other off-the-books government obligations for the future to the total debt pile, the picture looks even worse. In many countries, these are things such as social security, healthcare obligations, etc. Right now, as many of you may know, we have, I believe it has reached as high as 17 trillion a couple of weeks ago in negative yielding debt around the world. As many of you who are involved in the financial space may know that sovereign wealth funds, large asset managers such as pensions and others, they have certain projections and certain needs in terms of growth that they have to yield to their investors. And in a world where more and more government and corporate bonds are essentially yielding negative rates, I believe that more and more investment managers will be looking at alternative asset classes. So as I've said, it went as high as 17 trillion a couple of weeks ago. I believe it's between 14 and 15 trillion as of this morning, but it's very, very high. And at the same time, the global central banks are in a rate cutting competition as we speak. Some of you may have heard 2 days ago, the European Central Bank cut its base rate from negative 0.4 to negative 0.5%, and is continuing with their quantitative easing programs. I don't think that Bitcoin is connected to global macro very, very closely quite yet, but I think that if central banks around the world continue pursuing such policies, it will definitely be positive for Bitcoin's growth. We're also seeing these days like normalization, both in academia and in popular culture, of various unorthodox monetary policy schools of thought, like such as MMT, helicopter money, and a bunch of other things that some of you may have heard of. And we're seeing evidence of that in various searches and just in general discourse. Stephanie Kelton, a big proponent of modern monetary theory, believes that the American government cannot run out of dollars, just like a carpenter cannot run out of inches. And wealth inequality in the English-speaking world is almost at 100-year highs. And in many other countries, it's very, very high also. In my experience, I think more and more people are realizing that fiat money, central banking, and various easy monetary policies may have had at least something to do with that. I would recommend some of you to visit this website, which has a lot more charts that are related to this topic, which I find very, very interesting. So I think, in my personal opinion, that the wealth and income inequality that we're seeing today is one of the fuels that is driving sort of the rise of various populist and radical politicians and leaders around the globe, both of the right-wing and the left-wing variety. And we're kind of seeing, we're seeing that all around the world. I think that in general, populist and radical politicians are more likely to both sharply increase or decrease taxation, engage in aggressive monetary policies, or outright confiscate your assets. So it's not just the rich and it's not just the poor. I think the assets can be confiscated from anybody. I think that Bitcoin gives the 99% in money that allows them to preserve the fruits of their labor and makes the Cantillon effects manufactured by the 1% and or the incompetent central bankers obsolete. At the same time, Bitcoin gives the 1% an asset that is far more resilient to seizure by the mobs, so to speak. Central banks' demand for gold is at multi-decade highs, as some of you may know as well. 2018 and early 2019, we saw huge growth in their stockpiles. Some of the more aggressive stockpilers right now are China, India, Russia, some countries that are rapidly growing and want to position themselves in the geopolitical arena. And at the same time, while dollar still remains the majority of the global foreign exchange reserves, it is slowly going down in its share. So that kind of makes me want to ask myself whether we're entering a more multipolar world kind of in the coming century. I think, as some of you may know, either through reading or personally, in the last couple of years, we've kind of reached the end of the era of bank secrecy. So Switzerland essentially isn't what it used to be. And other traditional private banking havens aren't either. More and more we see Swiss banks share kind of private account data with tax authorities and various intelligence and security institutions around the world. So we have to ask ourselves, what is one of the possible emerging alternatives to Swiss banks that is arising at the moment? And that's been happening for the past couple of years. Hong Kong, Singapore is taking some of Swiss banks' share, but I think some of the technological solutions that are emerging are also going to take a small share of that slowly but surely. I think, as many of you will know, privacy is being eroded by the second. It is essentially, me personally, I'm living my life assuming that it doesn't exist at all. Mass surveillance is on the rise. But more importantly, I would say that various attempts to eradicate cash are on the rise also. You're seeing that everywhere from India to Denmark to Norway to Australia, and more of these proposed laws are coming along. Obviously, the governments and various institutions grasp on the economy and your lives would be much stronger if cash wasn't a thing. Sanctions and various weaponizations of large settlement networks, such as SWIFT and Fedwire, I think are also going to contribute to people looking not only for other forms of money, but also for other forms of financial settlement networks. Now, and I personally have a mild distaste for a lot of the countries that are mentioned in these headlines, but just agnostically speaking about this topic, I would say that if you essentially stop entire civilizations from being able to use certain banks or certain settlement networks, they will either start building their own or they will start looking for alternative solutions once again. What's interesting is that Bitcoin is very slowly starting to be increasingly frequently mentioned in the same sentence as the term safe haven or a new safe haven. You're kind of seeing that all over the media. Personally, I think that Bitcoin still has a little bit of ways to go until it can qualify for that role, but it's definitely a positive sign. Recently, during some of the volatility in traditional markets, we saw Bitcoin rally together with gold and other traditional safe haven assets. Some people would say it's coincidental, but whether that is true or not, I think it's an early positive sign. And you're seeing more and more, some of the analysis that a very smart guy, Quant Fiction on Twitter, put on his profile. He noted that a lot of the traditional traditional asset managers are more and more frequently talking and discussing Bitcoin in this sort of vein. And obviously, just very, very generally, as grim as it may sound, like the non-tech savvy older generations are slowly leaving this planet, while the tech savvy and younger generations are becoming adults. Some of us are forgetting about some of these things, but of course, internet and smartphones and technology is very important for Bitcoin. And internet penetration continues to grow steadily around the world, as is smartphone penetration. And more importantly, the proportion of our lives that we spend in the digital realm in one way or another is slowly increasing, both in the West as well as in China and in America as well. We are seeing slow but steady financialization of Bitcoin. A lot of kind of the more hardcore Bitcoiners, they think that ETF isn't important, or it may even be bad. But this is just something that I cut out from a newsletter from a traditional asset manager. And he said that as generally bullish as he is on Bitcoin, he hasn't gotten around to buying any yet because of the technical hurdles involved. We have to admit that still Bitcoin is a little bit clunky to deal with. I strongly believe that in the next 5-6 years that will get much, much easier. But these are the kind of people for whom things like like an ETF would be tremendously helpful, in my opinion. And we are seeing kind of significant progress in that area as well. Obviously, back coming online next week also with physical settlement, should be good. On kind of the less global macro and more kind of direct technological side of things, kind of Bitcoin Core and other layer 1 improvements are steadily continuing, regardless of what is happening to the price and to anything else that's happening around the world. A lot of steady growth is happening on layer 2. And obviously as many of you may know, and a lot of you are a lot smarter on these topics than I am, but a lot of the improvements are coming to Lightning Network also. And the entire kind of layer 2 ecosystem has been exploding very, very quickly, which I think is very, very important. Obviously, Bitcoin hash rate has hit an all-time high. Bitcoin security is growing. You can also view kind of the hash rate as a quasi-futures contract. So the miner's view on the space is definitely bullish for the time being. And a lot of the people are complaining about the mining distribution. That has also been steadily improving in the last couple of years. Obviously, existing privacy solutions are being improved also. If we ever want Bitcoin to fulfill that Swiss bank role that I previously talked about a couple of minutes ago, we definitely need, both for investors and the transactors, especially those that want to do it in size, they want privacy to improve. Obviously, like kind of talking to a lot of the people from the traditional finance space, they think that custody is arguably one of the most important things in the entire kind of securities industry. And it is very, very important that like Bitcoin custody becomes very, very robust. Luckily, we have kind of a lot of solutions out there already and also coming online slowly, both for individuals and institutions. I think Bitcoin has a growing number of non-monetary use cases as well. When I'm talking about that, I'm talking about things such as Peter Todd's timestamps, or some of the, for example, decentralized identity solutions that some of the guys at Microsoft are talking about. Obviously, these, in terms of a price driver, these are a less of a factor than some of the other things that I'm talking about. But nevertheless, I think they play a role in that feedback loop. I think, like, just very, very simply, and it's not a trend or a factor per se, but a lot of people are simply realizing that if they put Bitcoin and other, be it government or metal money forms side by side, they will realize that simply like just comparing two burgers or two shampoos, Bitcoin is much better than the other forms of money just in the majority of these dimensions or criteria. And I have noticed, at least in my own circles, just people kind of on the margins of the space are slowly coming around to this idea also. Obviously, Bitcoin infrastructure and everything around it growing very, very rapidly. I really like the fact that some of the more kind of esoteric solutions, such as kind of radio wave related stuff, mesh networks, satellites, I think these things are very, very important to kind of make the system more robust, because like as a large investor, you want to invest in something that you think is not easy to be broken, right? Obviously, I think as a millennial, I think Bitcoin memes are a very, very strong element of the community. And Michael Goldstein had a very, very amazing talk about this topic at the BitBlock Boom conference, I believe, recently. But essentially, the memery of the Bitcoin space is unparalleled. And as something that is an internet native product, kind of memes play an important role in spreading kind of the power of this technology, of this asset. Obviously, just to go a little bit quicker, we are seeing an explosion in Bitcoin literature. Some of the Andreas Antonopoulos books have been invaluable. Jimmy Song recently came out with a great book. Safedean's The Bitcoin Standard is a classic, of course. I would also recommend you guys to visit Der Gigi's 21 Lessons website, as well as Adam Tache's Bitcoin Rabbit Hole, which has a lot more resources kind of on these topics. Obviously, growth in Bitcoin educational courses, Biddle Bootcamp, programming Bitcoin, programming blockchain. They are, I believe, doing God's work in bringing more and more devs directly into the Bitcoin ecosystem, which are probably kind of the scarcest element in the space. Obviously, we also have, as some of you may have noticed, a rising number of Bitcoin-only entrepreneurs and businesses. I thought this was a very powerful tweet the other day. How Lamasu, the ATM maker, has several factories up and running already, and obviously has dedicated himself to the space wholeheartedly. For what it's worth, and of course, we never want to pander to kind of the previous generation too much, but I am noticing kind of more and more traditional finance and global macro people slowly being involved in the space, or at least doing their research. Some even go as far as recommending BTC to be a part of one's portfolio. And if you are following like Real Vision or Macro Voices podcasts, you may have noticed that more and more of their guests are speaking positively on the asset class. I probably couldn't talk about Bitcoin without mentioning the stock-to-flow ratio. I believe it was popularized by Safedin in his book. And then 100 million USD, otherwise known as Plan B, did a lot more work on it later on. I personally, there's a lot of debate about kind of this trend in the community. I personally subscribe to the idea that it is real, and some of the recent kind of statistical analysis show that it is not only correlated but co-integrated also. In general, to me, this makes sense because kind of many of the monetary theorists would argue that Bitcoin's scarcity is probably by far its most important characteristic. And essentially, time is one of the functions which makes people around the world finally realize why it's valuable from first principles in the first place. In general, and this is a slightly dated picture that I'm sure some of you have seen before, but we are still super, super early, particularly in terms of the percentage of the global capital base that is in this asset class. Particularly compared to the global debt markets, the global stock markets, the global monetary base overall is estimated to be over $100 trillion. So in general, we're still very, very early right now. Some of you, once again, more financially minded people may know that Bitcoin's Sharpe ratio has been incredible since its emergence. And additionally, like a crazy statistic that once again 100 trillion USD once again pointed out also, is that in the last 8 years, a 99% cash plus 1% Bitcoin position would outperform S&P 500. And S&P 500 has had an amazing last decade since the financial crisis. So some people believe that the returns in the equity markets are going to be a lot worse in the coming decades, which kind of makes the case for Bitcoin even more. And to make matters even better, as a portfolio manager, Bitcoin is also extremely uncorrelated to other asset classes. So it's very difficult to defend a position that Bitcoin is a bad investment, no matter which angle you look at it from. This is more of a kind of a personal story. A couple of years ago, I hired a programmer in Brazil to pay me for something, and I was in Russia at the time. That was roughly the time when I started to just seeing the light, because being in Russia, sending money at a push of a button to Brazil would be unheard of for me, or I would have to probably go through a bunch of banks or MoneyGram, et cetera, and which is, as some of you may know, is just an incredibly annoying process. Obviously, we've seen over the past couple of years a gradual destruction of the ICO complex and the majority of the altcoins. I think this is very, very good for the space. Nobody wants to come into the space and then be also presented with the task of choosing what particular asset to invest in. So I think it's good for the world's sort of tunnel vision to be focused on just one of the cryptocurrencies. And obviously, the funds raised by ICOs has been dwindling in the past couple of months. Technically, on paper, there's still $70 billion in alts. Obviously, given their liquidity, this number is completely meaningless, and I expect that number to generally continue to go lower in the coming years also. We have seen a steady reduction in volatility. I think probably a gradual reduction in volatility is the most important thing to happen to Bitcoin. For Bitcoin to be used as a money sometime in the future, we should seriously hope that this trend continues. Just a couple of things. Me and my team, we do some on-chain analytics. We have noticed that large Bitcoin holders aren't selling or aren't moving their coins in the last couple of months. Yes, price may go lower or higher in the short term, but we remain very, very bullish in the medium term as well. Obviously, we're working with 3 or 3.5 data points here, but MVRV, another ratio that we have developed that you can read on our blog, is saying that this bull market still has some space to go as well. Obviously, the number of addresses with 0.1, 0.01, or 1 Bitcoin has steadily been increasing. And a curious pattern that we've noticed as well is that, you know, Bitcoin in bull markets does a sharp swing and then it consolidates for a couple of months. And then it does a sharp swing upwards and consolidates for a couple of months. Typically, we've noticed that as it consolidates, the mempool has to calm down a little bit. And we've seen that since June, it has calmed down once again. So once again, regardless of the short-term whipsaws that may happen in the market, we remain to be generally very bullish medium-term and long-term. Realized price that some of you may be familiar with has also reached all-time highs last month and has a very, very sharp upward momentum also. I recommend you guys read an article by Harold Christopher Berger, who has done what he calls a log-log analysis in Bitcoin, where he used not only logarithmic price, but also logarithmic time. And he has noticed much sharper patterns. And he predicts that Bitcoin's price will keep growing, albeit at a slower rate, and volatility will continue to diminish as well in the coming decades. Last but not least, I would say that we've seen higher monthly lows almost every single month except February this year. There may be 1 or 2 exceptions on the road, but I generally expect this trend to continue also. And Trace Mayer and Pierre Rochard did a lot of work on this previously. I really like this version by Ben Davenport that he posted on his Twitter a couple of weeks ago, just describing the self-reinforcing loops and various effects that exist in Bitcoin. And since Bitcoin's emergence, a lot of these have been kind of feeding to make it stronger and stronger. And kind of these conferences, I believe, have their place somewhere on this feedback loop also. And last but not least, I will say that Felipe DeSanto recently had an amazing article where he kind of speculated about the future in a hyper-Bitcoinized world. And he said that only 1 out of 12 generations witnessed their money anchor change. And you may be the lucky one. So if inflation, state surveillance, geopolitical tensions, commercial banks, and negative interest rates make fiat currency holders suffer, there will likely be an increasing incentive towards buying and holding Bitcoin. Thank you.